Okay, how is it going, guys? I hope you all had a great weekend and you have rested well enough. We're coming into another week, and here's the weekly forecast of what we expect the market to be doing in the coming week. So first things first, we're going to take a look at the dollar index. The dollar currently is near mid-range of a strong pivot, which is the 98.5. It is in a strong pivot, in a mid-range of that pivot. So this is basically a long-term resistance on the dollar index. And looking from last week, it wasn't much of a good week for the bulls in regards to the dollar. The bulls didn't perform very well. They had a bad week. So what does that tell us, right? What does that tell us in the market, right? If we look at this high, which came in at, let me just highlight the high that I'm talking about. These two highs here. We've got these two highs. They came in at around 96.60, 96.66, somewhere there. If those two highs were an important top, then there's clearly no way the dollar should be able to break above those two highs anytime soon, right? So we are talking of a range between the 99.27 and the 99.45. Let me highlight that for you so that you can see which range we are talking about. So we are talking of 99.27, right? 99.27 and 99.45. We've got 99.45. This range is going to be a very important range on dollar index. So I don't expect to see the dollar topping up this range anytime soon. That means the sellers will look to come into the market whenever price gets to that point, right? The sellers will look to come into the market. So this is a weekly chart on the dollar. We also have a strong demand zone coming in at 98.250, the 98.250 range. We've got a strong demand zone on the dollar, on that range. So now let's go to a daily time frame, and then we see what we are really talking about. Right, so you can clearly see where the 99.27 price zone comes in at. That's a strong area of supply on the dollar index. And we've got the 98.250. That's a strong demand zone currently on the dollar index. So we'll be expecting buyers to pop in this channel. I'm expecting buyers to pop in. Excuse my drawing, it might not be that perfect, but it will do the job. So we've got this channel here. Obviously you can always draw when you're doing your own analysis for the week on your chart. So this range is very important, right? So it's very important that you take note of that range and where price will be trading at. So if price comes down here, we expect this range to hold. If price trades up, which I'm expecting in the coming week, I'm expecting some pullback to the upside on the dollar. I'm expecting some pullback or correction to the upside on the dollar. So I'm expecting price probably to test the 98,250 but rally upwards. So right now the bias on the dollar, it's still bullish. Yes, it had a bad week. The bulls had a bad week last week. Price corrected from the 99 price zone, and they had a very dreadful last week. Market has just been pushing, but you can see how price bounced from the 98,250 zone. It means the buyers in this zone here look to push price up every time it comes into this zone. So when we see the market continuing with the downtrend all the way to the 98,250, right? There's no need for us to panic there, right? We just have to wait for the 98,250. That's the zone that we should start looking for longs on the dollar index, right? So the 98,250 and the 99.27 price zone are very important price zone that you should mark on your chart. Those in the mentorship, you know what I'm talking about. You need to highlight this zone so that you don't get lost, you don't get caught up in the noise that's happening on lower time frames. So you must always have your own chart, the one that you don't change around too much or load too many indicators on it. You mark out your levels, you mark out your demand, you mark out your supply zones, then you wait for price action to do its job. You wait for price to move to its relevant direction. Whenever your zone is tested, whenever your zone has been hit, then you make a decision in that regards. For instance, on dollar, if dollar is to go to the 98,250 zone, I'm expecting price to hold. I'm expecting buyers to come into the market, thereby pushing the dollar up. And we all know what that means. If you are in the mentorship, you all know what that means to the euro US dollar, to gold, to the yen. So now let's go to a H4 so that we clearly see what we are talking about. Right. So the 98,250 from the H4 time frame, you can clearly see it has been tested. Here, there was a test of the 98,250. Remember, it doesn't have to hit 98,250. 98,250 is just a zone. There's a strong demand here on the 98,250. So whenever price reaches that zone, then you have to make a decision, right? Yes, if you are that much of a conservative trader, you wait for the 98,250 to get tested, like price to reach 98,250, but it also means you might miss some opportunities. So you can clearly see 98,250 was tested. Yeah, the second time was that not much. This was probably because of NFP, if I'm not mistaken, and price rallied, right? So you can see there were two opportunities. The first rounded test to the 98,250 zone yielded quite a number of pips. You can clearly see there. That's a lot of pips, remember. And then the second test also yielded quite a significant number of pips. You see, that's pretty much what you have to aim for. You see, you have to aim for something which you are so sure of, something that offers you better odds. What are the odds that price, when it comes back to the 98,250, is going to bounce and go up? The odds are quite high, you see. So you need to be taking those kind of trades. So you can clearly see, mark out these zones on dollar index. 99,270 as your 270 as your strong supply zone, and the 98,250 as your strong demand zone. Yes, 98,125 and the 98,10 zone is also a good area to look for longs. That means the 98,250 wouldn't have hold, right? So that's much about it when it comes to the dollar. I'm looking for dollar to resume a bit of its bullish move to the upside, probably to the 99 or 98 and 98,800 price zone. So the bias on dollar is bullish. So let's see what that means if we are going to be trading gold. Last week in the mentorship, I shared this chart of gold. I shared it prior to these 3 bullish candles forming. I shared it before this 3 bullish candles forming, whereby I anticipated price to rally, and it did rally all the way to the 1520. As you can see, the 1520 offers an area where we look to go short in the market. You see, 1520 offers us an area to short the market. So this zone here is a strong supply zone, and the bias from last week's analysis is still the same that I'm holding for the coming week, right? That's the bias that I'm holding for the coming week. You can clearly see 1524 and 1516. Those 2 price areas are strong areas of supply in gold. We've got 1470 is a strong demand zone. Price is rejecting from the 1470 price zone. Just a minute. So the analysis from last week was that gold has to rally all the way to the 1520, 1524 zone. Then from there, we look for short trades. That means our bias on gold hasn't changed. We're still going to be looking for short trades to the downside. Remember, we are bullish on dollar. So we're going to be looking for short trades on gold, right? The bottom line is that as long as 1470 or 1450 zone hold, gold still has more potential to resume some bullishness, right? As long as 1470 and 1450 price zone holds, gold has got the potential to resume a bit of an uptrend, right? But if those price zones do not hold, then we could see gold falling massively to the 1360 zone, right? That is, if 1470, 1450 price zone did not hold, then we're clearly seeing gold falling all the way to the 1370, 1365 price zone. So let's look on a daily chart for gold. So we'll be looking for bearish trades when it comes to gold, but from which area now? So we're looking for bearish trades from the 1516 and 1524 price zone. Whenever price tested those areas, then get your confirmation spot on. Look at what the dollar is doing. That's the first thing that you have to do. The more we get bullish moves on dollar index, the more we have to be focusing on gold to see what price levels are we trading at. You see, the more you see dollar rallying to the upside, look at what price level gold is at. Then you make a decision, right? You see gold rallying, dollar index rallying, sorry. You see dollar index reaching almost 98.800, 99 price zone. Then you see gold also hitting 1516, 1524. You see, guys, that's bread and butter. You have to short the gold because it's not gonna hold much on that zone. You see, so 1524 and 1516 are going to offer us better opportunities to short the market. Reason being that there are strong supply zone. I'm looking for sellers here, sellers in this range here, to push price down. I'm looking for them to come into the market. So I'm expecting gold to test 1524 or maybe 1520, 1516, then market tumbles all the way down to a 1470 price zone, which is a short-term demand zone. So for gold, we'll be looking for short trades from 1524, 1516, depending on how aggressive you will be or how the market will react to the dollar index move. That's where we are going to be looking at for short trades. So you must mark out 1516 and 1524. I'm going to do a summary of the resistance and support zones that you need to mark out on gold at the end of the forecast. So now let's look at dollar index. Right, same as gold. The analysis of EURUSD from last week, the bias is still the same, right? We are going to be looking for short trades. Last week, EURUSD was one of our best performers. We did get the 70% retracement I was expecting on dollar index, 7% retracement from previous 2 weeks high. That was the zone that we anticipated market to bounce to the downside, and we did manage to get some good opportunities there where we yielded probably more than 60-70 pips on EURUSD on its own. And same as this coming week, I'm looking for price to continue with an uptrend to the $10. There at the $10 now, that's where we have to start looking at the market for bearish potential setups here. So I'm expecting EURUSD to push further up, but the moment it reaches $10, I expect a strong bounce to the downside. As you can see, we are in a higher time frame demand zone, right? So these bullish moves to the upside, they are to be expected, but to what price level? To the $10 price zone. So this is where we're going to be looking for short trades. So our bias on EURUSD, we're going to be looking for short trades. The guys in the mentorship, you know what to do. We have to be patient. We need to be patient with the market, not to just jump in and trade what we don't know, what we are not supposed to be doing. So you can clearly see the $10 is going to offer, let me just highlight this. Where's my pen? This zone here, because it's a strong supply zone, right? You can all see, we can all agree on that. It's a short-term supply zone. So I'm expecting price to test it for the second time. There was a first test here, right? We missed that opportunities to short the market, but the second test hasn't happened yet. So I'm expecting price to pull up to the $10. If $10 does not hold, then we're looking at $11. You see, if this price level does not hold, then we look for markets to test the $11, which is coming in where the blue line is, this zone here. You see, so that's when we have to start looking for short trades. The reason why I say that's when we have to start looking for short trades, guys, is it's because at that moment in time, the odds for the market to push to the downside will be very high. You see, market structure is already telling us, okay, the odds for us to pull back to the downside is quite significant. So wouldn't you want to take a trade whereby the odds are in your favor? Yes, of course, it's the market, it can do anything. You see, no one is 100% certain when it comes to the market, but you need to increase your odds. You see, you need to make a trade, to enter into a trade whereby the odds are much in your favor. Not 100%, but at least 90-95%. You know, market is gonna react when it touches the $10.20 or the $10.10 zone, right? So same bias that we had last week, looking for short trades on EURUSD. That's what we are expecting when price test this higher time frame resistance line. You see the black line, this line here, that's our higher time frame resistance. Let me zoom out so that you can see. Let me zoom out. You see this higher time frame resistance line, then we start looking for short trades. So that's pretty much about it for this week, guys. I'm not gonna do the yen. The yen is gonna be for the mentorship group. I'm going to send the chart in the mentorship group, but already you should know what the yen is also going to be doing, but the levels, I'm going to highlight those in the mentorship group so that you know what levels we are looking at on USD JPY. So that's much about it on dollar index, EURUSD, and gold. So the levels, there's levels, resistance levels, and support levels that you have to look at when it comes to gold. So for your resistance levels, we've got resistance level number 1 coming in at 1527.50. 1527.50 is also a good area to take short trades. And then we have got 1544.50. You see 1544.50 and 1527. These are in addition to the levels that I highlighted when I first analyzed the chart. So I'm expecting a rally to 1527, right? This is on a H4 time frame. This is where we take our trades, guys, not 15 or 30 minutes. No, we take them on H4 time frame. So 1527 and 1544, expecting price to bounce to the downside. But if it's a case that, okay, we have gone to the downside, 1502 also offers good opportunities to go long, and then 4888 offers good opportunities to go higher. I'm sure you can see why. This is the reason why we get good opportunities at 1448 to go higher. This is why we get good opportunities to go lower from 1527. This is why 1544 is going to offer us good chances to go to the downside. Now let's look at the levels on EURUSD. Right, on EURUSD we've got the $0.088 zone. We've got the 1.088 zone. This is going to be a great price area to look for long trades to the upside. And we also have 1.94. 1.94 is going to be a great area also for short-term traders to look for long trades to the upside. I'm sure you can see why. This is why, right? And this is why this level offers long-term opportunities. And from the upside now, which is our main bias, we'll be looking for short trades. $10. There comes $10, guys, into the market. There. Expecting sellers to come in here. Expecting sellers when price pulls back to the upside, expecting sellers to short the market to the downside. So that's the $10.10. That resistance level should offer good opportunities. And then we also have the $10.85 will also offer good opportunities to the downside. This is the reason why. You see? So you can clearly see that $0.088 hasn't been tested yet, right? So it's still a fresh zone that hasn't been tested. This zone has been tested twice. So we had once here, once price was tested here, and then it tested again here. Now it's coming back. How is it coming back to that zone? We've got a clear secular return to $10. So those are the patterns or the characteristics of market structure reading that you should be able to be doing, which is what we teach in the mentorship group, so that you can do this by yourself. V returns do not work. You can clearly see here this one didn't work. Price returned in a V format all the way. It broke up to the $10.85, but $10 did manage to hold, and then price pulled back down. So that's much about it, guys. We're going to be bullish on dollar index, right? We're going to be bearish on fiber. We're also going to be bearish on gold. So take note of those levels that are highlighted, and we'll see what the week brings us. Last week was a very good week. We had a very good week. We harvested probably more than 300 pips, just above 300 pips from gold, yen, dollar, from gold, yen, and Euro CHF, and Japanese yen against the dollar, USD JPY, sorry. So last week was quite a good trading week, and most of the guys in the mentorship can concur, I'm sure. So that's much about it, guys, and hopefully we all have a good trading week, and may the odds be in your favor. And for those that we haven't subscribed, guys, just click the subscribe button below, and make sure you've got the bell icon ticked, so that every time I record any video, any analysis, you get a notification right into your inbox, and it saves you a lot of time to be checking the channel all the time. So just click the subscribe button. And for those who would like to join the mentorship, you can just send me an email or a WhatsApp message. All the details are on the website. So thank you very much, guys, for listening, and have a great trading week.